Hey everybody, Jeff Sutherland and Chase Waldron from eXp going to show you the market update, and it's going to be through the end of February, just last month, 2025. Let's jump right into it because we got some big time stuff to share with you guys. First of all, the future is bright. You got to bet on Arizona right now. TSMC, arguably the most powerful company in the world, is investing $100 billion, most of it going into Arizona in the construction of new fabrication plants for their semiconductor manufacturing plants. This is a big, big deal for Arizona. That was the biggest announcement that just came last week. So look for TSMC to make a big plunge. And if that wasn't enough, look at Mayo Clinic. They just announced a $1.9 billion. If you think about the scale of those two investments, $100 billion and $1.9 billion. And $1.9 billion is kind of a big deal. And Mayo Clinic is a big deal. So we're looking at major growth happening. These investments will change the landscape of the economy in Arizona. You can bet on Arizona.
All right, in this slide here, we're talking mortgage rates. As of February, we were sitting right at about 6.8%. They're fluctuating a little bit, kind of on a downward trend for February, but we are anticipating them to stay in the sixes throughout the rest of the year. All of the major analysts are talking about throughout the rest of this year, it's going to have a 6 in front of it. I know we were kind of wanting to see it go down into the 5s. A lot of people were anticipating some major drops, but it is not looking like that's going to be the case at this point. Everybody's saying that we'll trickle down a little bit, but we will remain in the 6s for the remainder of this year. This graph here, this shows the seasonal trend of Arizona. So we are following right along this year, 2025. We're following right along of last year. Here in the first 4 or 5 months of the year, it's beautiful here in Arizona, and transaction volume is higher. As we creep into the summer, it starts getting really hot. Not as much transactional volume is going to be going on, so it slowly declines throughout the summertime, peaks back up kind of September, October, and then declines drastically at the end of the year for the holiday season. And we are seeing that same exact seasonal trend right now.
Now let's look at the market index, my friends. Here's what I want you to notice on this slide. Supply overall in Pinal and Maricopa County is slowly inching up. Look at the bottom left-hand graph. You'll see supply is inching up, which means that it's no longer constrained. Now it's getting to be almost balanced. Demand is still on the low side at 78.7. So what does that mean for the entire valley? That means the entire valley as a totality is sitting in a buyer's market. If balance is at 100, we're actually in a buyer's market. Now, we do have some seller markets out there. We'll show you. But what I want you to know is supply is creeping up, and that will impact the prices down the road if it continues like this. Now, this shows you the demand and supply index and both of these lines. The blue line is supply. The green line is demand. What I want you to notice is at the very end on the right-hand side, you can see that blue line shooting up. And that is a kind of a big deal because we don't know when that's going to stop. That could continue very slowly, and it's nothing to be alarmed about right now. But it might actually soften up the prices even more because right now we're seeing some softening in the market. It's very interesting what's going on. So we got to pay attention to what's happening in the marketplace. Now, we're in the third buyer's market over the last 24 or 20 years. We had one in 2006 to 2008. We had a little bit of a blip in 2014, but the other buyer's market was in 2022. Now we've got another one. And so when buyers come into the marketplace and they make offers, they're getting a lot of concessions. There's a lot of negotiations. Leverage is the same for both buyers and sellers. So both parties have an advantage. And right now we are sitting in a buyer's market, believe it or not.
All right, and this chart here, this shows all of the municipalities here in the Phoenix metro area. As you can see, the ones in green are the sellers markets, the yellow is a balanced market, and the blue are buyers markets. And as you can see in the middle, all of those arrows are trending downward. This is showing us that even the sellers markets are trending downward. They're getting close to that balanced market. So as time goes on, we're anticipating to see that Cromford Market Index go closer to that 100, get closer into the balanced markets, and maybe even everything into a buyer's market. So that's kind of what we're seeing right now. And then this is another graph kind of showing the same thing, the buyer's markets versus the seller's markets. And then you have the balanced markets there in the middle. And something to think about, all of those buyer's markets are on the outskirts of town. The buyer's markets start typically on the outskirts of town and then work their way inward.
And then here we have appreciation. You're probably wondering, heck, look at this. It's still appreciating. Yes. Phoenix is forecasted to appreciate about 2 to 3%, very moderately this year. But we may see some price softening towards the latter part of the year. We may see those prices on the median sales price go down because that supply keeps creeping up. So that is something to watch. So over the next 6 months, it's going to continue to be a great time to buy a house without a doubt. Now, January sales counts, check this out. They're actually quite low over the course of the last 25 years. We haven't seen these kind of low transactional volume times except for like in January of 2008. That was obviously a bad time, 2007. And then earlier, like 2000s, you have to keep in mind, we didn't have the population we have now. So we had less transactions. So overall, this is shaping up to be very similar to 2023 and 24. And a lot of that has to do with affordability, you might think. But I'll show you a slide in a little bit that might get you thinking a little bit more about if we are affordable or not in the Phoenix Valley. Now, on top of that, we have these $1 million listings. Wow. We actually closed almost 500 $1 million listings in Q1 of this year already. You know, we used to say, wow, if you have $1 million house, you must be rich. Do you know somebody that has $1 million house? Well, right now, a lot of your neighbors have $1 million houses. And that's what happened because of inflation. It just skyrocketed prices all over the state. So there's a lot more $1 million closings happening. Okay.
All right. And this chart here, this is a beautiful chart. So this shows the blue line is the median sales price for anything under 2,000 square feet. And you can see how those prices changed over the last 25 years. And the orange line is the 5% annual appreciation, which is pretty typical for the market. And a lot of people are saying, hey, you know, the values here in Phoenix are so overvalued, right? And this chart shows that we are right in line, almost exactly to the 5% appreciation rate. We took a major hit in 2008, which dropped the values, and it took us a long time to get back up to that orange line. And now we are there and right in line with that 5% appreciation.
This is exactly why you got to bet on Arizona, right, Chase?
That's a fact. That's a fact. This is a good chart just talking about price reductions and a credit for closing costs. A lot of the buyers right now are able to negotiate those things because of the market that we are in. This is the median days on market in February. So we're looking at 33 days on market before going into contract. That was pretty similar to 2023. But before that, it wasn't that high since 2015. So that's showing that the days on market are higher than in the past. And then this one here, this is the price reductions. You can see that we're seeing a lot more price reductions on homes that are listed right now, almost over 1,000 more than last year alone. So we're seeing a lot more price reductions out there. And then this is concessions, right? So concessions, almost half of the transactions right now are getting seller concessions, where sellers are chipping in to cover closing costs, a rate buy down, and we're seeing almost 47% of the transactions, so almost half. And the next chart shows that between the home prices of $350,000 and $400,000, that's where the highest level of concessions are being given. On average, about $10,500 are given to almost 61% of those houses in that range. Yep, and that shows that there. That's the bell curve. So that shows that the homes between that range of 350 and 400 are getting the most seller concessions. 61% of those transactions are getting them ranging or averaging over $10,000.
And then when you talk about employment, people wonder, okay, what's going on in the employment space? Well, I just showed you two major employers that are putting major money into the Valley. And over the next year, over the next couple of years, we're scheduled to grow about 1% annually. A lot of that will be through healthcare, which makes sense, and social assistance. So those are the two areas. And I'm sure that as companies like TSMC start to fill their factories, you're going to see more of that as we inch into 2026 and 2027. So there you have it, my friends. This is Chase Waldron and Jeff Sutherland with eXp Realty, and we are here to serve you. You're going to see this all over the place. You're going to see it on Instagram and Facebook and YouTube, and you just connect with either one of us, and we'd be glad to help you because we're working hard for our clients. This is the year. Bet on Arizona. Whether you're buying or selling, we're going to take good care of you. Any last words, Chase?
Nope, you nailed it, man. Bet on Arizona. We're here for you. We're here to serve.
Thanks, everybody. Have a great day. Talk to you soon.